please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Some big movers after reporting the results. You can see FireEye down 11%. After hours, GoPro's losses moderated. It's down only 9% right now. Yelp down double digits at last time we checked. Meantime, Tesla down 4%. That is sliding as we speak. Qualcomm barely lower there. Shake Shack up 6% now. That's a big increase after it said it's actually going to open more stores this year and next year than originally planned. Kraft Heinz down 2.5%. Yelp's loss has moderated. It's down only about 6% right now. Cheesecake Factory down 3%. Let's get more on Tesla's cash burn here. As we mentioned, the shares are moving lower. Send it back to Phil LeBeau for that. Phil?
Kelly, they ended the third quarter with $3.5 billion, approximately $3.5 billion in gross cash. Now, that was an increase towards the end of Q2, but keep in mind that they also had about $1.8 billion in debt issuance in August. So in terms of the cash position right now, that's going to get a fair amount of attention from the analysts during the call. Tesla goes on to say during its in its investor note that it believes it's well capitalized, which, as we mentioned to you, is for 5,000 Model 3s per week by the end of the first quarter. We have yet to see what the production plan is for the fourth quarter. Remember, initially, the plan was that they were going to be making 500 per week by the end of the fourth quarter. That obviously is going to be one of the questions during the conference call, which comes up with Elon Musk in about an hour or so. Kelly, back to you.
All right, Phil, for now, thank you. We've got some news on Under Armour here. Let's get to Courtney Reagan. It's not earnings, is it, Court?
This is not earnings, Kelly. We just got those from Under Armour. This is reportedly 2 more executives leaving the company, according to Dow Jones, which is citing an internal memo circulated among senior executives on Tuesday night. According to Dow Jones, Under Armour is losing its chief marketing officer, Andrew Donkin, and head of women's, Pamela Catlett. Both will leave at the end of this month. And the memo that Dow Jones is citing says that they have decided to mutually depart ways and really doesn't give us much more. But we know that Under Armour has been under pressure, both the share price and the sales, as they face increasing competition, particularly from Adidas. Kelly, we also have some information for you from L Brands, and I want to switch gears because the stock is moving on this. L Brands shares up about 8% in the after hours. The company reporting October comps up 2%. They're also increasing their guidance for the quarter. They now expect to land in the higher end of the previous guidance, 25 to 30 cents, compared to analyst estimates of 29 cents on stronger than expected revenue for the month of October. Back over to you.
Wow, that's a big pop, up 8.5%. Yep. Courtney, thank you. Let's go back and check on Facebook, who just reported earnings a little while ago. Joining us for more reaction, Ben Dunbar, who's a Facebook shareholder from Gerber Kawasaki. James Chuck Muck here with us at Post 9. He just upgraded the stock to a buy from hold last week. And Ali Mogharabi from Morningstar has a hold on the stock. So welcome to everybody. Chuck Muck, just start with you. The shares are up about 1%, but what are you focused on here?
I mean, look, what you wanted to see was the revenue coming ahead of expectations and a flatter slope on the margin degradation. And I think that's what you're seeing right here. I think that maybe that comment from Zuckerberg perhaps spooked some people about maximizing security over profits, which is the right thing to do. But at the same time, when you think about the nominal dollar value of the investments, I'll call it $100 million versus $55 billion revenue next year, it's a drop in the bucket. So. Bye.
And we had some harsh comments on Capitol Hill against Facebook and others today. Dianne Feinstein saying to the companies, you bear this responsibility. She was saying how she had gone home with disappointment after yesterday, saying the companies don't get it. We're talking about a cataclysmic change. We're talking about the beginning of cyber warfare. You have created these platforms. They are being misused, and you have to be the ones to do something about it. Or we will, she said, Ben. How concerned are you about that weighed against the strong numbers this company just reported?
Well, the numbers are great, and although this may be a little bit of negative press for technology as a whole, it's all relatively new, and it's something that Facebook is getting out in front of. It's something that they're taking advantage of. They're spending the money to do it, and it's just going to be a drop in a bucket. I couldn't agree more that ultimately it's not going to have a big effect on profits or revenues, and it also reinforces how good of a platform Facebook is. And we're still going to see a lot of small businesses, a lot of movement from television advertising onto Facebook's platform.
Ali, you have a hold on the company. I mean, how big are your concerns about a regulatory clampdown?
Well, not that big, actually. And we actually think that Zuckerberg, in our opinion, is actually pursuing a pretty good strategy because in the long run, it will have a pretty good return on that, on those types of investments in terms of security, in terms of maintaining data and so forth. So we think overall is pretty positive. The amazing revenue growth that we keep seeing unfortunately is proving us wrong, but that's certainly good for the investors. Top line still growing at 50%. It's just amazing. It's an amazing company.
I think what people. Sorry, Bill.
Go ahead.
I was going to say what I think people miss is, although there are so many users on Facebook, there's still so many small businesses. There's still so much money that's going into advertising, not on Facebook. And so that's where we're seeing that most likely increase in revenues is from that movement of ad dollars being spent in other places and better allocated to Facebook. And ultimately, people are seeing results with their businesses. We're seeing it personally in our own business and in our clients' businesses.
Yeah.
James, just in terms of those drivers, I just want to get to the factors that will drive that, which would be pricing and the ad load. So obviously those are the two components. Yep. What's the trajectory look like right now, James?
Well, I think what's interesting on the pricing side is that what we're hearing from agencies and advertisers is that ROI thresholds are coming down. Which means
so they're willing to pay more per eyeball
in order to reach. And I think that there's a big dynamic that's happening in the broader advertising market. And we've talked about this before with the CPG, with brands, less brand affinity, more toward private label and the Amazon effect, call it. What will happen with that is the fact that there'll be increasing desire for performance-based ads, leaving less desire for brand-based ads, which means that you have a duopoly, and that was the premise of our whole upgrade. It's Google, Facebook. You can't stop this until the government wants to step in, and there's no indication that they want to step in anytime soon.
All right, we'll see, even after today's testy hearing, if that's the case. And after these numbers,
from a breakup standpoint.
Right. Appreciate it very much, guys. James, Chuck, Muck, Ben Dunbar, Ali Mogharabi. Shares are still up a little less than 2%. Some breaking news on the Fed chair decision. Sue Herrera, what now?
Dow Jones is reporting, Kelly, that the White House has notified Federal Reserve Governor Jerome Powell that the president does intend to nominate him as the next chairman of the central bank. That's according to a person familiar with the matter, according to Dow Jones. Apparently, the president talked to Mr. Powell on Tuesday, according to another source by Dow Jones, and the president had settled on Mr. Powell by Saturday. However, this source to Dow Jones cautions that the president could change his mind. The president apparently plans to formally announce the decision Thursday before he leaves for his trip to Asia, which will occur on Friday. So, according to Dow Jones, the White House has notified Mr. Powell that he will be the next head of the U.S. Central Bank. Back to you.
Sue, thank you. Michael, every hour now seems to bring further evidence that this is definitely happening.
I think the market has certainly made its peace with this. It seems like the least kind of disruptive choice in terms of the path of policy. So I do think, the market's going to kind of check off this box and say, we can live with this.
All right, we'll see tomorrow, and we're supposed to get this announcement. John Ford is just off the phone with Qualcomm CEO Steve Mollenkopf on the heels of the chipmakers' earnings that were just released. John, what do you have to say?
Well, Kelly, he called it a good solid beat and strong execution from the product business that sets him up well for fiscal 18. He also mentioned product strength across geographies and price tiers, including China. This is interesting for investors in technology writ large. He said that this shows the strength of domestic Chinese manufacturers of smartphones who are winning not just in China, but also in India, throughout Southeast Asia, and this is important as well. Average selling prices for these OEMs are rising. So think Huawei in particular here. They're moving into the premium price tier, able to raise prices. They're not just dealing at the cheap end, and that means they're buying higher-end Snapdragon processors. Mollenkopf also telling me that there's no new news on the licensing front. Qualcomm's, though, happy with the underlying market dynamic there, and points out this is really just a fight with two OEMs, though one of them is Apple. I mean, they're pretty big. 5G is still a calendar 2019 event, but he said the whole world is going to participate, so they expect revenue there in the beginning of calendar 2019, Kelly.
Here's a Tesla down 4% after dropping 3% during the market hours today. This after reporting its earnings, which showed a wider loss per share than expected. The company did beat on revenue. Let's get a little more here with Jamie Albertine from Consumer Edge Research, who's overweight on the stock, and Ephraim Levy from CFRA Research, who actually has a sell rating on Tesla. Ephraim, we'll just begin with you. Stock's moving your way. What jumps out to you in particular here?
Well, it's pretty much some of the headlines that we were expecting. We already knew that they'd had a disappointing results on the Model 3. What was a little bit worse was The Model S and the X, those volumes were less than expected, and the margins, the gross margins in particular, were disappointing. But the year started off with a lot of good news flow. The company was steaming ahead, but I think more recently, the last couple of weeks, we've started to see a rollback of some of the news flow. But I don't think it's derailed. I just think it's expensive.
And James, what about looking toward the the Model 3 schedule now being pushed out? They're saying, they'll be to this 5,000 unit pace by the end of the first quarter, potentially. And then in terms of the 10,000 per week goal, which they had stated before, they'll say, look, they'll have to reevaluate, really kind of conveying that it's quite a push and there's nothing really in the bag in terms of them being able to do this.
Yeah, and great, and thanks for having me, by the way. What I would say is they need to, they have a credibility problem. They've had a credibility problem before, but they have one now, and they need to, hold to some form of guidance on the Model 3 ramp. 1Q, I think, from our conversations, is about what people expected based on being delayed, to only 222 units through the third quarter. So that, I think they're managing expectations. They're okay, but they have to hit that. Gross margins, go ahead, sorry.
I was just going to ask you, but comment on the margins quickly.
Yeah, look, I think gross margins were a little bit more, frankly, they were above consensus slightly. I think many people knew that with the Model 3 being lower than expected, costs are still very, very high, so margins were going to come under some pressure. I don't think that's a surprise here, but clearly the 1Q, they have to hit something very, very close to 5,000 units per week, or this is going to reset lower, we think.
Yeah, Ephraim, I'll put the question to you because it came up earlier. Should this company be valued like a traditional car company?
Well, this definitely is not a traditional car company. It never has been. It's really changed the business. The fact that so many companies plan to have their electric vehicles by 2020 or 2021 or moving towards autonomous vehicles, I directly credit this largely to Elon Musk. So, it's a technology company. It does deserve a premium to General Motors or Ford, but I think, once again, that it has an excessive premium right now for the risk that people are taking.
All right, a little bit of that premium coming off. Shares down 4.5% after hours. Ephraim and James, thank you both. Talking Tesla.
You're welcome.
Shares of Shake Shack up 5% after its latest earnings report. John Blank from Zacks joins us now. Talk a little bit about why. John, they increased the pace of restaurant openings. What do you think's going on here?
Kelly, this stock's been trading in a swing trade from $30 to $40 a share. We entered this earnings report about $38 a share, and we're going to pop up to $40. The earnings beat 2 cents on a 15-cent consensus, which is standard stuff for this stock and this company. Going back to the IPO 2.5 years ago, they beat every quarter, Kelly. So I would not be a buyer on this stock. I think this is a swing trade to 40, and we're seeing that pop to 40 right now.
John, they did have some margin pressure at the store level. They talked about the labor costs being up and things like that. Is the actual single store profitability worthy of the kind of premium that the company trades for right now?
Yeah, well, the premium, Michael, on a forward look, 59 cents a share is what they're looking for in 2018. That's a 63 times earnings. So I'm never a buyer of a stock at 63 times earnings. As far as the growth of the company, they're looking at about 14 stores, $4 million in sales a store, about $56 million a year. They do about 20% revenue growth on that, but that's not what you're talking about, which is that margin pressure. I don't know. You have to wonder if these hiking wages this time of the cycle is going to start to hurt companies like this. I think you got to think, longer term, other than this pop to the swing at 40, I'm a seller.
Mike, you were actually looking at those labor costs, including in Cheesecake
Factory. It's very true across restaurants in particular. It's a very acute pain point that they have, and there's really no way out of it, right?
But it's a good sign for the economy. Look, this is the conundrum these companies face right now. It's okay that those labor costs are going up. Do you pass it along, or do you not? Are we in an environment where they can pass it along?
Yeah, not yet. At least not at the same pace. I mean, Cheesecake top line was down slightly, and their labor costs are up over 3%.
John, what would you say about their increasing labor costs? They have these these sort of ordering kiosks now. Shake Shack does it. They're trying to roll out and maybe help keep that number down.
Yeah, the thing you got to worry about, Kelly, is this is a company that's got lines out the door at a lot of their new stores. So they are so critically understaffed to begin with. And you have to say to yourself, if I were them with twice the sales of a McDonald's, I'd probably pay up and lose some margin here because of the growth. So I think since the stock and the company are really about growth, I think he'd probably do an Amazon here, get away with a lower margin, bring those workers in and get those lines down and see if they can get the revenue up and the quality up.
All right, John, thanks for joining us. Yeah, Shake Shack still up 5% after that earnings report. John Blake from Zacks Investment Research.